Hello, I'm David Nelson. Welcome to Newsmax. My next guest needs no introduction. Larry Kudlow is a leader in both the political and economic community. He served under President Reagan as Associate Director in the OMB. He was Chief Economist at Bear Stearns. He is a nationally syndicated columnist and, of course, host of the popular CNBC show, The Kudlow Report. Larry joins us by phone from New York. Larry, welcome. Thanks so much for being with us today.
Thank you. Thank you for having me.
Larry, let me take the conversation to Washington. It's been a busy week in D.C. Of course, we had DOMA. The Supreme Court has now ruled. And, I don't want to debate really the social implications here, but there is definitely a financial outcome. And it was on your show, I believe a guest pointed out that if same-sex couples now will start to receive federal benefits as a guarantee, this case was about $353,000. You put a multiple on that, we could be talking about a lot of money. Are states and the federal government ready for this?
I don't think there's going to be a lot of money involved, by the way. I don't agree with that. The CBO did an estimate of this a couple of years ago, and it came out to, I don't know, something like 1/10 of 1% of GDP. These are not big sums. Probably the biggest area is gift taxes and estate taxes. In fact, the woman who won the lawsuit is, I think, scheduled to receive something like $300,000 in gift taxes. But no, I don't think that's really much of an issue. I also think it's very confusing right now regarding federal benefits. If you move from a same-sex state to a non-same-sex state, what happens? I don't think anybody knows that yet. So it's all very complicated. But I would just say generically, whether you're talking Social Security benefits, whether you're talking income taxes, whether you're talking gift and estate taxes, I just don't think this is a huge financial event. We did cover it last night as a financial event because we are CNBC, and we didn't go into the social ramifications and so forth, but I don't think it's a big number.
You mentioned the fact that, moving from one state to the other, and that could be an issue. And it seems like the court is not giving any guidance here.
Right.
Will they have to rule again?
Well, they may. Or else, the local courts or the federal district courts are going to have to rule again. Yes, I don't think the whole ball of wax was settled yesterday. I'm no expert. I'm not a judicial guy. I'm not a lawyer. I'm not a constitutional guy. But I think it was not all settled yesterday. Let me leave it at that.
A lot of corporations have been ahead of the curve on this and have been offering same-sex benefits
Yes.
For some time.
Yes.
Does this ruling now set the stage for the rest of corporate America to come on board here and start changing the benefits package?
Well, that could be. Carly Fiorina, who was my guest host last night, former CEO of HP, thought that was the case and thought that companies had been ahead of the government. And she knows better than I do. So I think the short answer to that is yes. These are private companies, so they should be able to do what they want. Again, I don't know if that bumps into these, conflicts between federal and state law regarding marriage. I don't know, but it seems to me a private company shouldn't have a problem with that.
Larry, the other big news, of course, this week is the immigration bill in the Senate. And now that the security package, or rather the security amendment, has been added on, I believe it's about $46 billion in added security, more agents. They'll be building the fence. I believe tens of thousands of agents will be added. Now it looks like the vote could actually come within days. They'd like to do this before the July 4th recess. Larry, you've been way out in front on this, and you've been saying that immigration reform is pro-growth.
Yes.
And an actual quote is, "It's not about dollars and cents; it's about the soul of a nation."
Yes. Yes.
Does this have
that.
any chance of passing the House?
That's a good question. I don't know that I can answer that. I was watching my friend Paul Ryan last night on the Hannity show, and I know Paul is working hard for immigration reform. The House is probably going to come up with some of its own ideas. I don't think it's going to buy into the omnibus Senate package. And look, I think that, again, I believe immigration reform, if done properly, is pro-growth. I also think it's consistent with border security. I mean, the current system of border security and visas is completely broken, as you know. So I think that if you do this reform properly, you're going to help border security. And I want, as Ronald Reagan, I worked for Ronald Reagan. I'm a disciple of Jack Kemp. I think you know that. My view is America should always be a shining city on the hill. And I think we should be an example of freedom and economic freedom and political freedom, and people want to come here. They should be able to come here. Having said that, the whole bloody system broke down. And so we have tremendous controversies going on inside the Republican Party and elsewhere. I believe this is fixable. I think the Senate bill moved the ball in the right direction. Okay, is it perfect? No. Do I understand every page of it? Heck no, I sure don't. But it sounds to me, between beefing up border security, improving the visa system, all the various verification issues, keeping them off entitlements for a good many years, but then legalizing them, getting the immigrants out of the shadows, as Paul Ryan said last night. And these are all good things. And I think we need a larger labor force in the U.S. You know, this is important for growth. If you take a look at the numbers, not only has the labor force participation rate been falling for many years, but the actual size of the American labor force has stopped growing. Now, there are many reasons for that, and I'm not sure I understand every one of them. But what I'm saying is, if you want long-term economic growth in this country, like 3.5% long-run growth, you got to have good productivity, and you got to have a rising labor force. And that's why I think we can put legal immigrants to work, whether they're what I call the brainiacs or whether they're the lower income wage people in agriculture and retailing. I think that'll help our country to grow. It ultimately becomes a job creator. And yes, it ultimately helps solve the deficit and the entitlements.
Larry, we only have 30 seconds left, and there's a political outcome to this as well. And you said that if this dies in the House, you know, it would be very bad for the Republican Party going forward, and that winning back the Hispanic vote. How important is that to the 2014 midterm elections and, of course, the presidential election in 2016?
Well, I think it's very important. I think it's extremely important. I don't think you do this just to get votes. I want to just say that. I think you do this on principle, and I think you do this on border security and economic growth principles, if you follow me. But yes, politically, I think the Republican Party has to show the immigrant community, that's including Asians, Latinos, Hispanics, everybody, that they are open to this, that this is a different GOP, and that many of the prior statements are going to be erased, and that the GOP will be a welcoming party. So yes, there is a political dimension to it, and I'd like the Republicans to get with the drill.
Larry, it's been about a week since Chairman of the Fed, Ben Bernanke, was last before the cameras. And since then, the market reaction has been violent. You know, we've seen some recovery in recent days, but you're on record saying that you think they actually are doing things too soon here.
I am. You know, it's funny. One of the things I'm watching here, besides the volatility in the stock market, is the price of gold, which is plunging, as you know. And I think at this point in time, the gold price is a deflationary signal. And I think part of that is reflected by the fears that the Fed is going to go too far, stop buying bonds, end QE altogether, which means a slowdown in the money supply. That's what it really, really means. And I don't think that's either wise or necessary at this point in time. I don't think the economy is particularly strong. I'm not worried about inflation at all. That's really the message of the gold price. So besides interest rates rising, which is another tough factor, gold falling, you know, I wish the Fed would just stay where it is for a while. I don't see any rush in them taking action.
Larry, you know, you mentioned bonds, and interest rates have been rising. It started actually in May, and in May we saw almost a historic move in interest rates, and bond prices, of course, been hit. Bonds are going down, but it also hit defensive names in the stock market, dividend-paying stocks that have acted as bond proxies. Are we getting like the first look of the beginning of a bear market, a long-term bear market for bonds?
Well, that's a tough question. It's a good question. It's a tough question. I think we're certainly going to have an intermediate bear market in bonds. Okay, long run, I don't know. As I said before, the inflation rate is awfully low. I mean, we just got new numbers today, and the PCE deflator, the personal consumption deflator, which is the Fed's favorite measure, year on year, all in, is 1.0%. That's all it is, okay? So that doesn't tell me that bonds are going to go off the map. It doesn't tell me that bonds are going to crash, and doesn't tell me that interest rates are going to soar. But the Fed has a big influence, as you know. So if the Fed stops buying bonds altogether in the next 6 to 12 months, I would expect rates to go up. If you want, just as a rough approximation, I think you're looking at a 3.5% 10-year. Right now it's about 2.5%. Maybe it could go to 4%. That's roughly in line with the growth of nominal GDP, and that could have a negative impact on the economy. That could. So that's another reason why I don't want to see the Fed get aggressive here. I just don't think we need them.
I've talked to a lot of money managers recently, and one of the things they point out to me, they say that, the market is trying to come to grips with what the risk-free rate will be, say, 2 years from now in 2015. And then at that point in time, we'll have an understanding what we should discount back and where stock prices should be. Do you go along with that?
Well, look, interest rates, if you're asking me about interest rates and stocks, interest rates are very important to stocks. You use interest rates as a discount factor to capitalize corporate profits. Corporate profits are a little slower right now, so that probably doesn't bode all that well for the stock market. If the Fed goes through this so-called tapering exercise. So I don't know. I'm not sure how far this is going to go. I don't want to get overly bearish here. I don't want to get too bearish. All I'm saying is I think stocks and bonds are correcting. I think the Fed is probably an important factor behind that correction. I would be very wary as an investor. I'd be very wary as an investor. And I think the interest rate cycle on the way up has a ways to go. Yes, it has a ways to go.
We're coming to the end of the quarter, and some are pointing out that maybe the recent strength in the market, this little bit of a recovery we're getting is, end of quarter markup. The data, as you point out, it's been rather mixed. We get one round of data. The GDP data was certainly a disappointment. Then we get some positive data. The markets are still up pretty decently for the year, and I guess my question is this: are we going to have a second half recovery, or in fact, have we seen the highs of the year?
Well, tough question. I'd be very happy. I mean, looking at my stock sheets, the S&P 500 is up just about 12.5% year to date. Now, that was at the close yesterday, so the S&P is up this morning as we talk. So call it 13%, okay? If the Federal Reserve goes through and starts throttling back their money supply and throttling back in their bond purchases, you're going to get a lot of volatility. You could get some downside, much more downside in stocks. So here's my bottom line. I would be thrilled if the S&P ends the year up, let's say, 12%. I would be very, very happy if that were the case. I'm not sure that's going to be the case, but that would make me very pleased. Because, again, if the Fed goes through any sort of tightening, and I think tapering is tightening in money supply terms, I think it's going to damage stocks. I think the economy, is not in a recession. We're not in a double dip, but it is not a strong economy. It's a 2% economy, all right, maybe 2.5%, maybe not. It ought to be a 4 or 5% economy coming out of this deep recession we had years ago. So what I'm saying is, if the Fed does damage with interest rates, beware stocks.
I think a lot of investors would like to lock in, 12, 13% for the year.
Love it. They would love it. I would love it. Look, I own the indexes. I'd love to see it myself. I'm just not sure. Now, the other point is profits. If we're talking stocks, let's talk profits. Profits are the mother's milk of stocks, okay? Very, very, very important. The outlook for profits is slower. People down to, 5 or 6% profits growth now, maybe even lower than that. I guess I don't have any particular disagreement. All I'm saying is if profits slow down and interest rates go up, that's going to hurt stock valuations.
Let me go to something. You're mentioning profits right now. One of the things I'm seeing in the earnings reports that came out, at least in the last quarter, and we're now coming up, of course, against another quarter of earning reports, is that we're seeing bottom line growth, but top line growth has been almost non-existent.
Right. I agree. Revenue is coming in slow. Nominal GDP, that's one way to look at this. Nominal GDP is only growing about 3.5% in the USA. And if you look around the world for these multinational companies, it's pretty much the same picture. You see very like Europe is still in recession, emerging markets are slumping, China is slumping. So yeah, there's a sales squeeze going on. Now, it all depends. I think earnings are more important than sales. I don't disregard sales. I think the productivity factor, the cost-cutting factor, putting a cap on wages, all these things that companies have done have really paid off for them, and the earnings have exceeded expectations, almost every quarter, almost every year. And earnings are, as I say, they're the mother's milk of stocks. They're the backbone of stocks, all right? So the question is, how clever can these companies be? The question is, will they be able to execute at lower costs and keep their earnings margins reasonably decent? I can't answer that question, but I'm pretty confident because I think this whole story, going back 4 years, the reason we have any growth at all is the resilience and cleverness of American businesses who mainly operate in the free market. All right, that's the real story. It's not government. Government has basically been an obstacle to the economy. But I think businesses have been outstanding. They got a lot of cash. They're making good money. Their balance sheets look pretty good. They deleverage. So, that's a good part. And that's why I don't want to be overly bearish.
Larry, we're out of time. We're going to have to leave it right there. Thank you so much for being with us.